Hey, who wants to talk about investment strategies?
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital, and very fortunate to be doing another podcast episode today. Got two great guests with us. Got Ryan Tanel, our experienced investor, and Solomon Hunter, our aspiring investor today. So guys, welcome to the show.
Yeah, good to be on.
Thank you for having us.
Definitely. Absolutely. So let's talk about you guys for a second. Ryan, you're up to bat first. Tell us a little bit about yourself.
Sure. Yeah. So, I have always been fascinated by real estate, or more just money. How can I make the most of it with doing the least amount of work? And, after looking at all the potential careers out there, there's probably some that you can make more money than this, but, not with doing this little amount of work, or at least something that you can build that can turn into a passive source of income. So I started off, my original degree was from University of Texas in radio, TV, and film, making video editing. I read Rich Dad, Poor Dad. And, after a couple of years, I was sold to just make the transition over to real estate. So I moved back to Austin and I started doing mortgage loans to just learn the business from the inside out, just doing residential loans for people buying homes to live in or investors. I did that for 7 years full time. We ended up closing 600 loans for families along the way, and, made a good amount of commission income doing it. Started doing my own investing on duplexes and single family in 2016, and then decided to do that long enough till I had saved enough reserves and figured out how multifamily worked, and did a couple of networking masterminds that they have. I was part of Jake and Gino Wheeler Profits Real Estate Lab with Dave Tupin, and after I figured that out, just ended up quitting the job and doing this full time for the last 2 years.
Nice. Let's dive into a couple of those areas just a little bit deeper. So you say you started investing in single family in 2016. Now, was there a grand plan to use that to escape your job, get out of your job, or did that kind of happen later?
Definitely. So, the long-term vision has always been to be in investing full time. I'd love to own just a lot of, real estate, all over either Texas or all over the US. So I started off doing mortgages first just to learn how to do it. But yeah, that first property, I got a duplex as a house hack, FHA, 3.5% down. I lived on one side, renovated it up. When the other side was vacant, I moved to the other side, renovated that. And then, after I'd been there a year, I moved and bought a house, moved into that one, and then completely rented out the duplex. So once I had enough properties, I was going to quit my job.
Yeah. I pitched that idea to my wife once upon a time. Hey, let's go buy a duplex, live in one side. And she looked at me and says, Brian, we have 5 kids. I'm like, yeah, you're probably right. We're not going to find a duplex, but I did use both my VA and my FHA loans to, house hack. It's kind of, you move in, you live in it for a bit, you move out, turn it into a rental, but that's very similar to how I started. So you started with the duplex, progressed from there. Just go through the progression of how you grew that. And what I think most interested in is throughout the process is when were you able to sit down and say, it's time, it's time where I can cut the ties and I can do this by myself or on my own.
Yeah, definitely. Yeah. So, 2016 was the first year I bought the duplex. The year after I bought just a single family, it was a 4-bed, 3-bath. So I moved into the master and I rented out the other 3 rooms, and I lived there for free, essentially building equity over time. And I wanted to get more real estate, but I actually didn't get another deal for 2 years. I had somebody pass along a distressed seller that was going through a foreclosure. It was a realtor. And they said, hey, I could, put this on the market, but he's going to get foreclosed on in the next 35 days. Do you just want to buy it? And I'd read a lot of books on creative financing. So I bought that deal subject to the existing financing within 5-6 days of them getting foreclosed on. We had to pay like $25,000 of back mortgage payments to get it caught up. But then I owned it with essentially $50,000 of equity built in. So we touched it up a little bit, and then within a month or two sold it. We didn't make a ton of profit on that one compared to some of the other deals, but just being able to get in there without a little bit of money and learn how to do a subject to deal was fun. And, then just, a couple other properties where, hey, the price is like 10, 20% less than it should be. So let's buy it. But the real thing was I made most of my income from doing mortgage loans, and I really was just doing the investing to get the experience. I got a lot of luck on the equity appreciation because of the bull market we've had. But if I didn't have tons of savings and, I would have been hard pressed to find a way to get out of it. So definitely the savings, and then joining the masterminds where I was being around guys who were doing deals that I didn't think were that different than me. I think real estate, if you just kind of figure out how it works, it's just like a system. And as long as you know what levers to pull, anybody can do it. And, you find good people that you can call your mentors and say, hey, I'm new to this. I think I know what I'm doing, but please help me from messing up too bad and get myself into bankruptcy. So I'd call and run every deal by them potentially. And, I'd say, hey, I'll partner with this on you guys. I'll give you guys whatever percent of the equity you want. Just let me get into a deal. And with enough practice, people trusted me and they said, hey, there's actually some good deals here. So let's do them.
Nice. Yeah, mentorship is something that I absolutely love. I've got a couple of paid coaches right now that are really helping in a lot of areas, and I wish I would have started doing that earlier, to be honest with you. I mean, my first mentoring was something similar to what you did, similar to Jake and Gino, but that really helped launch multifamily. And now it's like every time I plateau or every time I get to a roadblock, coaching's my first thing to look at. Who can help me, learn how to get past this block, or who can help me get past this block. But I appreciate you talking about that and the value of coaching there. So how's it been so far? How's life been different since you've, broken free and gone full time in multifamily?
Yeah, well, it's an entrepreneurship roller coaster for sure, because you just live on the deals that you do. So I don't have any other source of income right now other than the multifamily business. And so some of that comes from cash flow dividends, but those usually take a while to start building up, and they're pretty small at the beginning. Most of the time as general partners, we get paid most of our profits on the back end when the property sells. So I've pretty much gone through the initial savings that had a liquid checking over the past couple of years between, running a business, paying for marketing, driving, just to look at deals. And then I invest in all the deals that I'm a general partner on as well. So I've gone through the savings, and I'm actually selling my, single families right now just to provide the liquidity to keep the business going for the next couple of years. But it's scary. After I quit my job, there was 10 or 11 months where I didn't get a deal, and we got close a lot of times, but it really weighs on your psychology when you're trying and trying and trying. And I think they said you're supposed to review about like 80 deals before you get one closed. I'd probably underwritten 180 before we actually got that first one, so just the mentality of you got to stay strong. You got to know that in the long run, it's going to be worth it. But you do have to have at least a backup plan or a way to be safe until you can, go out there and wait, 5 years or however long until the property sells.
Yeah. And I mean, I still had 3 years left at my day job when I started, and I do have a military pension, but it's not, it'll pay my mortgage, but same thing. I was fortunate enough to have, 3 years worth of deals under my pocket when we broke out of the W-2. And it's a different thing. I mean, we've sold a couple of properties in the last 2 years, but long run, it's going to be awesome. And, I'm sitting in my house right now. My kids are upstairs. So if I want to see my kids, I just, hit pause on the Zoom calls and walk upstairs. But it's definitely an adjustment. That's what I'll say. Bigger chunks coming in instead of, regular paychecks, just they're, fewer and far between. But the goal is to get those big chunks coming in every month. And that's kind of what I'm working for right now. So, we'll see. We'll see.
And the psychology too of, you got a lot of earnest money on the line, and you're like, man, this was, months of my previous job that I really need this deal to close.
Oh yeah.
Yeah.
I've got over 200K in earnest money out right now on different deals. So it's, it's one of those things. And you talked about selling your houses for the liquidity. It's one of those things where, we need to maintain liquidity for the loans. You have to maintain liquidity to be able to get the loans. But at the same time, when you got $200,000 out in earnest money, and you're sitting with, investing in all of your deals as well, that's probably the trickiest part, is maintaining enough liquidity while still actively participating. So anyway, that's my struggle right now.
It's always entrepreneurship game, right?
It is, and my head is, trying to think, okay, how can I keep a certain amount of money liquid and still, anyway, that's something I'll figure out in the next couple of weeks. But, it's the entrepreneur problems, we're making good money. We're going to make good money long-term. Just got to make sure that we're playing the short game and the long game at the same time. So
absolutely.
Well, cool. Well, let's talk a little bit about why. I mean, you talked about wanting to invest, wanting to make as much money as possible for the least amount of work. Let's go a couple of steps deeper than that. What is your why for doing this?
Sure. Yeah. I started off doing this mostly because of freedom. If I had all the money that I ever need, then I probably wouldn't work. I don't know if there's anything inherent about real estate itself other than it's just a great predictable vehicle. What's interesting though, I've really come to enjoy it quite a bit, that there's an element of creativity you can have into solving some of the problems that you encounter. There's design aspects that you can do to when you upgrade a property that you can decide, all right, are we going to put crushed granite in here? We're going to do different kind of xeriscaping, what color schemes we're going to use, what materials we're going to use. So there's some fun in picking out the materials, and there's also just pride and satisfaction. And, even though I'm not the one out there swinging the hammer saying, hey, I was the one who had to put all these pieces together and this is the finished product. And, look at how many, residents that are living here, how many lives we've impacted there, how many investors are going to have predictable returns because of this, how many contractors and vendors we've been able to pay for the work that they're doing for us. So you really are affecting a whole lot of people on each of these deals that we do. But, I'd say as far as the why I'm doing this day to day is, the flexibility to say, hey, I want to do a deal and, by the beach so that I can hang out by the beach every day. Or like you said, if I want to take a break and, go have a 2-3 hour lunch, I can do that. If I want to work late or early or not at all, or, twice as hard, that's all an option. And the future's just up to us.
Yeah. Yeah, it is nice. It's nice to have that flexibility. I've said this a lot, I'll say it again. I don't have true freedom yet. I have flexibility is what I call it, just because if I stopped working right now, eventually I would run out of money, so I'd either run out of money or have to, severely limit our lifestyle. But yeah, so we're not quite there yet, but you know what? I'm in a good spot, so I'm not going to complain. So anyway, let's talk about, one of the deals you've done. Tell us a little bit about it, pick your first or your favorite or whichever one you want. And let's talk a little bit about it.
Yeah, I've talked about other deals in the past. I don't think I've actually talked about the deal I have in Dallas. So we bought a 12-unit apartment complex. We closed in November of last year, and I actually was able to do a 1031 exchange. I sold one of my duplexes just barely in time to, within a couple of days to 1031 into this 12-unit here. And this was, I want to say, the fourth deal that I had done. As far as like the multifamily space is going. And usually we've done syndications where we're raising capital from limited partner investors. But on this one, because it was a 1031 exchange and because I grew up in Dallas in Coppell and, my family's still up there. My dad's been a great advocate. He just retired this year and he was saying, hey, I'm looking for ways to invest in real estate and support you. So I gave him a call and well, actually, I'd say the deal actually came from him. So he was at a networking brunch with it's called CEO Netweavers over there in Dallas. And he was able to just be around other CEOs that are doing all kinds of businesses. And they talk about ways to grow business, do better marketing, whatever, just how do we stay connected and help each other. And one of the guys was saying they have a nonprofit foundation that, they basically take people that were in rehab or addicted to drugs and they put them in a halfway house for a year with, discounted rent until they get back on their feet and can find their own apartment afterwards. And they had just encountered problems for 3 or 4 years that they owned this thing where they had, 4 different property managers that none of them would work out because they were taking forever to do the maintenance. They had gone through, 3 to 4 different contractors that had taken a 50% deposit for the renovations, done a little less than a third of the work. And then you never hear from them again and they don't answer the phone and the unit's still not done. And, they had just had years of that. And these guys have full-time jobs running this nonprofit foundation and doing other things. And, they told me we had to just decide, are we, in the real estate business or are we trying to do a nonprofit business? We're not trying to really be landlords, but we're stuck doing it. So my dad calls me up and he says, hey, Ryan, they're having this problem on this property. I think you should call and just make them an offer to buy it and take it off their hands. And so I drove over there the next day and I met with the guy and he walked around the property with me and he says, yeah, I mean, I was thinking about selling it. We haven't talked to a realtor or anything, but I don't know what do you think it's worth? And at the time I had CoStar access, so I could pull up, I knew what they had paid for it, at least, from what their loan balance was at the time. And was able to run some comparables on what rents could be in the area, what comparable sales were. And, I put together a nice formula to say, hey, I know you're not a real estate guy. I'm coming up with a value of, $800,000 for this building because of X, Y, and Z metrics here. Here's the properties, that are selling for $60,000 to $70,000 a door down the street. The rents are coming in around $1,000 to $1,100 over here and here and here. So based on this, for it to make sense, this is the price that we can pay. And that number was $800,000. And he said, give me a minute, let me talk to the board. And so he came back and he said, hey, if you can do $850, like we'll just call it a day. So, I talked to my advisors, which is my dad,
Mhm.
and
Right.
came back the next day and I said, hey, I think we can do that. So we ended up signing a contract a couple days later after going through the finer points, and had that 60-day close with a 30-day option. I said, hey, I'm doing this 1031. That's why we need the optional
Yeah.
30-day extension. So, but good thing we had that. We needed it. But yeah, I mean, essentially we took it over, and at the time, it was probably 70% occupied, and the highest rents were like $900 a month.
Mhm.
We closed that in November, and I got a general contractor over there to do it. And I don't know if I said, but with my 1031, my dad was just the rest of the money. So I
Mhm.
raised it, I guess, from him, but
Yeah.
he was
Yeah. Yeah.
like, hey, yeah, it's a good project. So we had a general contractor go in there, and these are
Mhm.
all big 2-bed, 2-bath, 1,200 square foot units in
Well,
a
that is
three-story
large. Yeah.
building. They're pretty big for apartments, and they weren't in that bad a shape. It was built in 1980, but
Mhm.
we were able to get the first couple. We got 3 units that were vacant, renovated, within 2 months, and they started renting for $1,400 a month from the previous 900. So it was a big increase. And then we're just kind of going through each of the rest of the units. Then we have the final one just vacated, and we'll be able to start renovations. It'll probably be ready in 5-6 weeks, but because these are such large units, I was thinking we'd spend, 13, 14,000 a unit getting them turned. It ended up being about 18,000 a unit.
Mhm.
We replaced pretty much everything, luxury
Mhm.
vinyl plank floors throughout. We even did black appliances,
Yep.
countertops. We just did resurfacing instead of any kind of granite.
Mhm.
Gooseneck faucets, chrome finishes all the way throughout, new door handles. We painted everything, replaced all the ceiling
Yep.
fans. But I
Yeah.
didn't think it'd be that much, but it really adds up,
Well, I
and
mean, you had 1,200 square foot units too, which is really large. And a lot of those repair, like the flooring and paint, that scales with how big the apartment is. So 1,200 square foot apartment means you're doing 1,200 square feet of flooring. So yeah,
and two
that,
bathrooms too. That extra
Mhm.
bathroom where it's like another shower, another vanity,
Yep.
another sink,
Yeah.
So
Yeah.
yeah, it definitely all added up. But anyway, so I mean, we bought it for 800. I mean, I haven't had a broker give us an opinion of value,
Mhm.
but I mean, even on a 6 cap, by the time we get all the units leased, it should be worth about 1.7, 1.8.
Nice. 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 Yep. Those are good numbers. I do that all day, every day. Well, you know what? Maybe not. I think I'm looking for the same deal where you can put a 0 on the back of that. But yeah,
Oh,
I take
that's
those
great too.
returns every day. So,
Yeah.
well, cool. Well, last question before we get on to Solomon, and that's what's next for you?
Just trying to close more deals. I found our sweet spot is the 20 to 80 unit value add properties here in
Mhm.
Central Texas between Dallas and San Antonio. And, I just feel like those are big enough that the small guy can't really come in and do it unless you're syndicating capital. And it's a little too small for the institutional buyers to really be in there and nitpick at it. And, it's the most likely to have mom and pop owners that are just willing to get rid of it because they're either retiring or, they're not really cut out for real estate. And, we can go in with operational efficiencies and just through a little bit of elbow grease get some phenomenal rate of returns on those where there's a little less competition. So
Mhm.
ideally I'd love to buy 2 or 3 more properties in the next 12 months,
Yep.
syndicate all of them, and just kind of build the capital raising platform where we can attract new investors to come and learn about this and hopefully get involved in more deals.
Yeah. Awesome. Awesome. Well, hey, thanks for sharing that. We're gonna switch gears a little bit and welcome Solon. So, Solon, welcome to the show. How you doing, man?
I'm good. I'm good. Thank you for having me.
Absolutely. So, do us a favor. Tell us a little bit about yourself.
Okay. Well, I'm Solomon Hunter. I'm originally from Charlotte, North Carolina. At the time, right now, I'm a full-time diesel technician. I started working on trucks 2016.
Mm-hmm.
So still doing that. My first actually way I got into real estate was through wholesaling, and that was
Mm-hmm.
in 2019. Did a few deals, nothing life changing, just like 2,500 here and there. You know what I'm saying?
Mm-hmm.
But it actually taught me, a lot about real estate and how to
Mm-hmm.
go about, the lingo and just the ins and out of real estate. Stopped doing that for I want to say a couple months. Then I came across Tyler,
Mm-hmm.
YouTube, and just decided to check out the seminar. And from there on, I
Mm-hmm.
joined, and yeah. So right now I'm just looking into multifamily and looking
Nice.
to change my family's trajectory.
Awesome. Awesome. So let's talk about your motivations. I mean, you said at the very end, looking to change your family's trajectory. So I assume that's part of your why, but let's dive into that a little bit. What's your big burning why?
My big burning why is most importantly take care of my family and freedom. Just really, when I was young, my family really, I would say, built a lot of confidence in me, and I always felt like the pressure of like I have to be the one to, to make a change and
Mhm.
just do great things. So I feel like this is the direction to, to do that.
Mhm. Yeah. Yeah, I love it. I love it. I think it's good attitude to have no matter what you're doing is I have to be the one to make a change. I think
Mhm.
that's pretty healthy, to think about that. And you're always in control. But well, cool. Well, let's see what we can do to help you in the next, 15 to 20 minutes or so. So Solomon, we got Ryan on the line. What do you want to
How's
ask
it
him?
going? Ryan, yeah, I did a little research before I got on. So
Awesome. Good man. Love it.
yeah, man. I see you just said that you only focus on 20 to 80 units. Is there any plans as far as like going for more, like bigger apartment complexes?
Yeah, eventually we've got, on the deals that I do where we have to raise, more money than I can personally raise. I was able to raise like $1 million on our recent deal, but we had to get other equity partners if we're doing deals that need $2 or $3 million capital raise down payment. So, I'd love to get in the same space until I'm consistently either raising all the money myself or just doing deals with the people that I really like. But if I get to the point where I have so many investors saying, "Hey, I've missed out on your last deal, like, you need to do another deal," or I guess that'd be the point. I'd either start doing more deals or bigger deals.
That's something that I think I learned early on is, what's the biggest thing that keeps me from scaling? And it's how much capital you can raise, so I've said this many times, if you're to focus on one thing starting out, you should probably lean towards, raising the money.
Yeah, and that's the actually position that I'm in right now, trying to
Yeah.
find ways to raise capital. My next question is, what was your first big mistake when you started investing in multifamily?
You know, the lesson that I really learned last year doing all of this was making sure that you pick really good partners, because when you sign on a operating agreement with partners, you're in there for 5 years. And if somebody doesn't really pull their weight or is taking too long to get back to you, or things are getting missed, or heaven forbid, just you guys get upset at each other and someone either starts sabotaging the deal, or, there's a lot of bad things that can come from bad partners. And it seems very exciting to hear about the potential that someone could do when you've got a deal and you're like, hey, we want to do this deal. We want to get in the game. I'm sure we'll figure out. There's a lot of optimism when you first get started, but 6 months or a year into doing a deal, there's always a lot of problems. And being with people who have a lot of experience already doing this and have a great attitude and are in it for the right reasons, not necessarily make the most amount of money, but to say, hey, how can I help benefit the community? How can I do the best deals that are possible to do, or how can I make the most money for our investors? Those are the people that you really want to be around. So just the biggest mistake that I've made was not doing enough work screening the partners and finding good people to work with.
Yeah.
Okay, yeah, that makes total sense. That makes total sense because that's
Yeah.
kind of like I want to say like a marriage, really.
It
Yeah.
absolutely is.
5 years.
And that's an important point. I mean, when you disagree about, certain things, how to operate a property, it can get tense, especially if things aren't going great. So a lot of those things, you should agree upon, business plan, what the triggers to sell are, just things like that, especially when you come to the end, a lot of people say, hey, we're going to do a 5-year hold, and nobody ever does a 5-year hold, right? I mean, every 5-year hold I've seen, well, they may now because of where the market's at, but every 5-year hold I've seen advertised in the last, 5 years is already sold, So yeah, I think I think what Ryan says is absolutely key, making sure that your interests and values are aligned, and then make sure there's clear expectations on, hey, this is what it's going to take us to sell. This is our trigger to sell. This is our trigger to refinance, and have those things clearly delineated and agreed upon beforehand. And you're going to save a lot of heartache later on.
Yeah, one way you can even fix that is just to say, hey, let's like work together in a way that's not a contract, especially if you're working with a mentor, someone that's got a lot of experience. Say,
Mhm.
let me help you in ways that, we're not bound legally to work to each other. It's just, hey, I'll provide value and I'll help you with whatever you need. And if one day it doesn't work out, I'll just walk away. No harm, So just kind of waiting until you have worked with somebody for a while and you know who they really are before you actually do deals with them.
Okay. My next question is, how did your first deal go for you, and what challenges did you come across?
Yeah, I mean, the first one as the duplex went great. You know, I bought it right when the market was going up, so the rents were going up and the
Mhm.
price of the house or the duplex was going up quite a bit. And I spent more money on materials renovating, but I also learned how much stuff costs. So that the next time and the next time, I learned a lot as well. As far as the multifamily, the first deal I did was in April of last year, and we bought 32 units, and that one it surprisingly just went really well. I mean, we actually it's in Gonzales, Texas, so it's a real small town. So we weren't really able to find a good, reliable third-party property manager to go out there and manage it. And it had a on-site leasing person. Well, I guess her family lives there, but she doesn't really live there. She lives off-site. We give her a discount on the rent to live there, but basically learning how to work with somebody, not being in there micromanaging, not doing everything, but then also helping them and teaching them the ways that it needs to be done in an appropriate way. And it was only 32 units, so she was only part-time working with us, and she had another job part-time. And so just kind of figuring out how to draw the line of what are the expectations, because even the real estate, you can be really good at underwriting, or you can be really good at having knowledge of construction or wholesaling or contract negotiation. But at the end of the day, the people that get wealthy through working well with people, whether that's through the vendors that you work with, your actual on-site leasing team, the agents that you work with that refer business your way. I mean, you can go so far by yourself, but you're going to go way farther as a team and working well with people. So yeah, just man, I've learned more about how to work well with others and work well with a team in this last year than I did the whole time I was doing mortgages. So yeah, that's definitely one of the learning curves.
Okay, for sure. So you say, what was the big difference between being a loan officer and the managing partner as far?
Well, yeah, one of the reasons I got out of mortgage is because it's very competitive in that everybody is in it for themselves. Your sales
Okay.
guys. So if somebody wants to buy a house, and you got 5 loan officers, all 5 of them are going to say, you should work with me and you shouldn't work with that guy. But, in the multifamily game, it's a little different because there might be a property for sale and, maybe your group likes it, another group likes it. But, as long as everybody plays well with each other, there might be an opportunity for you guys to buy it together. Or there might be an opportunity where you realize and say, hey, I have skills understanding how, leasing and operations works, but I don't understand construction as well. Or I'm really good at raising money, but I'm not really good at finding deals. And a lot of people have complementary skill sets. So it helps an environment to be very collaborative and for everyone to work together. Whereas in mortgages, you're just in yourself. No one's really got your back, and everyone is really hoping that you fail because then that means
Okay.
deals for them.
Gotcha. So you like the team aspect of it more,
Mhm.
I would say. Yeah, I would
Absolutely.
say the same.
Yeah.
Most definitely. Okay. What is something you've noticed when looking for deals that gets overlooked?
I would say the way to know that you're doing something unique in real estate is it should be effortless. Like you should be able to have it be repeatable. And it's very, very hard to do that. The deals that I've found so far have been passed my way because of networking. Someone found me and they liked, I don't know, my personality or something about me, and they either offered to do a deal with me, or they, like brokers, offered to give me a deal off market. So the deals that I've been most excited about, obviously, when we make a lot of money, that's exciting. We have one in Canyon Lake that we turned a property that was just these 14 cabins into short-term rentals. And that has been a very difficult, it's probably the most difficult project because we've had a lot of construction and we've had a lot of variability in operating costs, but it's been the most creative endeavor. And I think it's going to do the best performance-wise because we paid market price for a property because we had so much more that we were going to do to it. So I think if you can figure out a way to see something unique about a property that other people aren't seeing, that's how you really create value. And I think the only way that you can do that is you have to be in that area. You have to know what the people in that area need, what's missing. And then once you know what a community or an area needs, that's when you can go out and find it. And you can find it in a property that might even be market price, but it's just currently being utilized for the wrong purpose. So it's, I don't know if that really helps, but just learning what's needed in a community and then finding that in a building.
Yeah.
Yeah,
I'll
yeah.
throw my 2 cents in. I mean, a lot of people aren't getting numbers to work out, but one thing that we're looking at is longer term holds, so instead of 5 years being like the end game, we're looking at like 20. We underwrite out to 20 years. Here's what the returns are going to look like if we hold for 20 years. And one thing that's nice about that is my opinion on your underwriting is every block in your underwriting is always going to be wrong. So when you underwrite things, you try to make solid projections. You try to be close to right. But I think the longer time frame you look at, the more of a chance you can take with numbers. So if I were underwriting something to try to sell it in 3 years, there's a lot of volatility in the market. Well, a lot more volatility right now in pricing and market than real estate normally has. But if I stretch that 2 to 3 year time frame out to 10 to 20, now there's a lot less things are going to stabilize, and there's not as the swings aren't nearly as big, and I can maybe afford to pay a little bit more. When other people are making offers on a property that are like 85% of what the ask price is, we might be able to come in between 88 and 90, and just from looking at a longer term perspective. Other thing we're looking for is we're always asking brokers, hey, do they have an assumable loan? And if the answer is yes, we'll get information about the loan. And if the LTV is too low for us to make it work with an assumption, we'll ask the next question: is the owner willing to keep some of that money in his equity, or is the owner willing to write a note in second position? So we're also trying, a couple of creative financing, things on multifamily, when that makes sense. So we haven't signed a contract yet on a deal like that, but we're getting close.
Okay, great. All right, I got one last question. What is some advice you would tell an aspiring investor when starting in syndication?
So advice, it's worth it. And the more that you can soak in, the faster, the better you're going to be. I think a lot of people, you get distracted by, either shiny objects or bouncing between a lot of different things, or they say that they're going to do it, but they're not really all in. The way that you can be successful is you have to put all of your attention into it. And you just have to work harder than the other people are working. The guy that can make 50 phone calls a day is going to do more deals than the guy that only makes 20. The guy that's driving out to the property to check on the renovations every day is going to get better returns than the guy that goes out there once a month. So I wish there was like a silver bullet, but I've spent, 10 to 12 hours a day, either working on learning how to underwrite, or listening to podcasts, or reading books, or going to conventions, or talking to mentors, or, gaining little bits of knowledge that I can, accumulate and all put together. So, just like anything else, the more effort you put into it, the better you're going to be at it. And it takes a lot of time.
I would say, just remember, you're going to learn more from taking action than you're ever going to learn from reading books, listening to podcasts, going to seminars or webinars or conferences or whatever. As awesome as this podcast is, okay, the best way you're going to learn is by taking action. So do whatever you've got to do to learn the game, but make sure you're putting that into actionable steps, and you're taking action every single day.
Gotcha.
One thing that kind of came to mind, the way that my first approach when I, even though I had a lot of experience doing mortgage and I own my own properties, when you switch to multifamily, no one takes you seriously. It's hard to even get somebody to let you work for them for free, which is crazy to think. But, what I was doing is I learned from mentor programs on how to underwrite deals, but everybody underwrites a little bit differently. So what I would do is I would meet somebody at a networking event or a convention. I'd say, hey, you're really cool. Let me get your business card. Maybe they would go to lunch with me. Maybe I would, just listen to all their stuff and say, you're the kind of person that I want to learn from. And then I would underwrite properties and I would send it to them. And I'd say, hey, I know we don't really know each other, but I underwrote this property. It's listed for, $5 million. I think it's worth 4.1 if we buy it. Can you tell me where I'm wrong in my underwriting? And then, if you do that often enough, most people will probably say no, but you'll get 2 or 3 people that were like, man, this person's taking initiative. They're doing something, and they'll give you a chance. And then you learn their underwriting style, and then you find a deal with them. And, that's how you get into the business, even if, at least that's a better way to do it than just asking people to go to coffee and saying, hey, how can I help you?
Yeah.
Find me a deal.
Yeah.
Very much a take action step too. So
Mhm.
yeah, I like that. All right. Well, we are about out of time. So one last question from me to each of you. Ryan, you get to go first. How can listeners learn more about you?
Sure. Yeah, we've got our brand is Top Producer Investment Capital. We help realtors, loan officers, and busy professionals invest their capital in multifamily real estate. So topproducerinvestmentcapital.com. We're also the same handle on Instagram, Facebook, TikTok, just about everywhere.
Awesome. And Solomon, same question. How can listeners learn more about you?
You can follow me on Instagram at Solo Kyrie. That's SoloKhairi. That's my middle name. You can follow us on Instagram as well, 26 Refine Group, and go to our website www.26refinegroup.com, as well as LinkedIn. So yeah.
Awesome. We'll make sure that stuff gets to the show notes so that everybody can find these guys. So once again, thanks a lot for coming on the show today, and had a little bit of fun today. So thanks a lot.
Thanks for having us.
A lot of fun, not a little bit of fun.
Yeah, a lot of fun.
A lot of fun. I don't know where that came from.
A lot of learning.
A lot of fun.